Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Becoming a Treasurer series, Craig Jeffery is interviewed on a chapter in his book, The Strategic Treasurer, A Partnership for Corporate Growth. The chapter entitled Envisioning Treasury in the Future takes a look and makes predictions about what the future holds for treasurers. It explores what will remain the same and what will change across several categories. Listen in to glean some Treasury insights for your journey. Welcome to the podcast, Craig.
Thanks, Meredith.
Today, I'd like to explore a chapter in your book, The Strategic Treasurer, entitled Envisioning Treasury in the Future. To start us off, could you explain what this chapter title means in general terms to you?
Sure. I guess I first want to start off by saying I'm so impressed that you're reading The Strategic Treasurer as preparation for some of these Becoming a Treasurer series. So thank you for doing that. If it wasn't work, would you still read that book? Please don't answer that. But, you know, this idea, this chapter about envisioning treasury in the future now has a few years on it. And but I would start with an experience I had, and I believe I shared this on another podcast some time ago. This was in Disney World in Florida, and we were waiting. I know it was Space Mountain. We were in the line. You know, they have all these lines that loop you around, and they have these things that entertain you. Well, they had a recording there, and it was, in the future, packages will be digitized and transmitted as beams of light. And this was replayed over and over again, and I can still hear it in my head. I hope I've remembered it correctly, but they said it enough times to last a lifetime in my head. And, you know, I thought, that is not a fax machine where it copies it and sends it. It's not it's not like some of the printing that we use for printing physical items. But, my initial reaction is, no, it won't. Packages won't be digitized and transmitted as beams of light. That's not going to happen. We're not going to have any reassembling. But, that's a little bit of my sarcasm and skepticism there. But how we do things will change so dramatically. What's hard now will be something we don't think about. And I think the idea that there will be a lot of change is very meritorious. And how do we envision what Treasury looks like in the future is worth an investment of time. And so this chapter and I suppose our podcast discussion today will take a look at what's happening, what are some predictions about what the future holds for us, what it holds for treasurers and Treasury, and what will stay the same and what will change across, several different dimensions or categories of thought. So it's really thinking about what lies ahead. And what I mean by that is not the future is here, it's already here now, but what lies beyond that, a little bit farther as we extend our thinking and we extend the trajectories of what's occurring.
Craig, you mentioned changes, and there's been a lot of shifts and turns during the COVID-19 pandemic. How do you think Treasury and the finance communities are envisioning Treasury in the recovery period?
That's a complex question. I think I'll try to take that in some parts. So during the COVID-19 pandemic and recovery, and we've certainly been in recovery from the pandemic for a long time. So we're recording this at the end of the second quarter, and we finished period 20 in the Global Recovery Monitor series, part of the Treasury Coalition. And there's been a significant change in both some actions, plans, and expectations. Every time there's a crisis, there is a change in expectations, particularly for Treasury. As I think about some of the different financial crises or issues that have come on, there is a change, either short-lived or permanent, in terms of what's expected in Treasury. back in 2008, 2009, the financial crisis, expectations on Treasury for visibility, for risk management, elevated and remained elevated, even to this day. Well over a decade on, the expectations changed. They stayed heightened. The board had increased expectations. So there's an aspect of certain crises create a permanent change. Others create a little bit of a flurry, but not much activity. When you mention the shifts and turns during the COVID-19 pandemic, a couple of those items were notable. This movement to digitalization or from paper to electronic was quite dramatic. And, depending on how you measure things and what you look at, you can come up with some different numbers. But as we looked at what occurred for actual movement to more automated processes, whether it was with receivables or payables or treasury activity, we saw about 2.5 years worth of typical movement occur during 2020. So what would normally take 2.5 years of time in terms of items moving towards more digital method occurred in that 1 year. So that 250% is really pretty significant. So the digitalization was a big item. The ability to work remote, but remain connected with people, really, due to the length of time that people were remote, changed how people worked. They're more familiar with the remote tools and connecting. And there's certainly an impact on what people are doing, but this ability to work in a different location will have permanent repercussions. Not as much as people thought at the beginning. There is kind of this return to the office mindset, but the majority is hybrid, where there'll be more flexibility of where people are and what they can do. And how you manage remotely is important. We have another podcast on that. I'm not sure if that'll come out before or after this one, but that's interesting. And if I have time for another one, or for more descriptive on a couple pieces of this, I think I would say that the attention of moving remotely so rapidly and the challenge that brought to processes made people rethink what do we need to do to make things work. And this idea of I'm remote, I can't do physical processes, I need to move to digital, had an impact in everything from digitally signing activities to building in processes that were managed all in the system. And this, I don't know if people thought about it this way. This is how we think about it, but this idea of defects are the biggest driver of cost. But what drives defects? Well, that's manual processes drives defects. Broken processes drive defects. All of these defects drive cost in terms of time and people, which is a huge component, but it also drives cost as far as the cash conversion cycle. So this whole pandemic and this, emergency move to liquidity, which always happens during some kind of crises, really emphasized, a couple of these different levers. What's going on with receivables? That's our biggest level of concern. Do we have adequate liquidity? So, this recovery period, as we recover and as we move forward, we'll see more of a continued emphasis on better forecasting and liquidity planning, people running multiple models. A number of companies that never did that started doing that and needed tech to help them. So digitalization in the paper to electronic world, removal of activities and manual processes that cause defects, this remote environment. And then I could talk more about fraud and security because of the heightened attack methods that occurred during the crisis. Those look to continue to impact Treasury as a payment security superintendent.
Let's talk a little bit about Treasury's role in the corporation. What has changed and remained the same? Where do you see this role heading in the future?
Yeah, this might be a little more boring than I want it to be, but the traditional roles of liquidity management, financial risk management, financial institution relationship management, those will all stay the same as broad categories. But what's going to change And what has been changing is a greater risk focus. This is on financial risks. It includes operational risk, particularly with payments, and some business elements of risk, which is more of a continuing factor. But to each of those parts, on the financial side, I think Treasury has long been focused on financial risk management, whether it's using hedging or just avoiding risk and using their financial acumen, business acumen, reasonable approach to activities. They've been doing that already. But what seems to be driving that change, I think, in the future is anytime there's additional volatility, there's more attention paid to it. But second, this overall ongoing increase in exposures that organizations face. They face this by the natural process of they're growing, they're expanding into new markets, new countries, new currencies. These are factors of complexity, and by nature, as you continue to become more complex, your exposure is higher, so risk management becomes more important. So financial risk management will become more important as individual companies continue to move in that direction. So that's more of a secular trend. On the operational side, on payments risk, there's so much cybersecurity risk broadly, but there's also this area of how do we secure our payments? This requires multiple people, both the CISO, the treasurer, people in AP, other areas. But the superintendent of payment security must be the treasurer, not the superintendent of all cybersecurity, but responsible for coordinating the different parts for this particular area. And that I think is becoming more apparent to some people, and it's lost on others. But as losses continue to mount, as the attacks become more automated, both the spoofing types of attack and compromise of systems, this is going to require more attention and ownership by the treasurer, but also more support and coordination with the CISO or the chief information officer if they're doing double duty. The last area, if I may, I know there's more to talk about, but you said what's going on with the role of the corporation, what's changed. The Treasury group needs to continue to act as an agent of change. And one area that we're seeing continued multi-year change has to do in the cash conversion cycle. Not just Treasury activity, but the whole order to collect, order to pay. They're getting more involved there. That impacts the overall aspect of liquidity that's working capital related. But as we look to move towards more digital processes and look at things comprehensively, the comprehensive view includes multiple areas and has to be coordinated. So we see either a stronger, overseer, coordinator, or owner role of the cash conversion process. That's been a secular trend for many years, and there tends to be good reason for that. So those are a few of the changes of the Treasury's role and what will occur in the future. And I'm pretty sure you're going to ask about data and tech as well. So this idea of big data, managing data, being a steward of data, and what that means for analytics and analysis with Treasury is also a big role. But I'm going to hold off because I'm pretty sure you were going to talk about something about that.
Yes, we will touch on that. So, Craig, in your book, you mentioned that treasurers have a responsibility to be good stewards of assets entrusted to their care. What are some exciting technology developments to help them support business processes and provide data more accurately and efficiently?
It's a loaded question. It's a big question. I think there's, and I'll talk about tech a lot, but what's happening that's exciting about tech at the intersection of business processes, I think there's a couple changes, and I don't want to get too theoretical, but the idea of there's much better tech now that's available than there was 5 years ago, 10, 15, 20. There's continued revolutions, version 6, version 7 of data, of formats, of how we connect, of different types of open APIs versus file-based transfers, et cetera. So this idea of exploding data, massive ability to to run compute and to leverage things with business intelligence tools and to do better analysis is awesome for Treasury because they manage risk. They need to look at different models and scenarios. And to the extent that they have bigger, stronger tools, they have more leverage. This is this is big. And so big data, from how you can store data in data lakes or blobs to how you can use it with different types of analytical tools, whether you call it business intelligence or other types of transformative tools, is massive. And as good stewards, we need to use tools to be efficient and effective at what goes on. So I'm going to leave that on the tech side for now. There's long been a shift of moving to cloud computing, leveraging this ability to scale up and scale down and outsource some of the headache portions and protection issues. Two other things to talk about here, maybe, or we can talk more on the process side too. But one would be, managing liquid assets has always been a key area and focus, but the growth and protection of payments is really interesting. The use of different types of tools, payment hubs, different types of networks for managing payments to protect it, to increase the efficiency, add to the scalability, leverage the power of networks is really, really useful for Treasury and really for any payment professional. But these are exciting times in that area. And I'll do a little bit of a side discussion for this, Meredith, with your permission.
Yes, that would be great. Go ahead.
There's this idea and changed mindset of how payments work. Not how payments work, but how they're handled. One is historical and linear and handoff. So if I do payments, I'm sending messages and I'm transferring funds. There's this point to point to point. I'm passing a message, I'm moving funds, I'm receiving information, I'm going back and forth. And it's all discrete set of handoffs. And so it's viewed as a linear process. Whereas there's a lot of change, and Swift has some really interesting items. So do, other players that have this engineered database mindset where the messaging is in a hub. It's not a message. It's like, here's a database of information, and it inherits different properties. People add to it. And so there's I don't want to call it like the concept of blockchain where you have these different places you can confirm and validate who owns what. But this idea of you have a single source of truth or a validated source of truth that people can add to it, it makes it so I can see where payment statuses are. I can fix them in flight, whereas I would always have to start the process again or send it back through the entire channel. That's changing how we're doing settling, and that's really, really interesting. So the idea of these payment networks that are not just messaging platforms, but they're central engineered databases that let us add all kinds of enriched services is really, really exciting. And there's a lot more that we could talk about there, including some of these faster and better payments. The idea of you want it fast, you want it good, you want it cheap. I think the idea of the tech and how we think about the processes means why not all of them and include secure. So I think there's a number of things on the payment front. But finally, and I don't want to call people assets, but the resource that companies have, including their human element, the people, the staff that are wanting to develop themselves and doing great things. The idea of developing people, particularly around technology or areas, is really important to make sure you're intentional about development of yourself, your career, and your people. And this relates to how we think about all of the data, the exhaust data, the data that comes out of how a business operates that can now be used and managed, for everything from risk to forecasting across the board. But
let's touch on visibility and risk management. Will forecasting finally work for most firms?
Forecasting is an area that people spend a lot of time on. They spend the most time on in Treasury, for example. They buy systems that they don't use because they're not working very frequently. They want to spend more time. They want it to be more accurate. And it's an area of focus year after year for, I think, at least 5 years now. But why doesn't it work? And what will make it work, which is part of your question, right? Visibility works pretty well now. People are getting visibility to all of their bank accounts. They're getting visibility to their ERP systems. It's becoming much more open, whether it's through APIs or pushing data back and forth. So there's good progress on visibility. And then on the forecasting front, it's really hard to do an accurate forecast and to run multiple models because that was typically done in some Excel world. I'm pulling data out. I'm applying my thoughts to it. I'm then loading into Excel, or I'm loading into a cash platform or a forecasting system or a TMS. And then I have to go track and see what worked and what didn't work and what's the cycle to make that better. There's too many touch points and too much manual activity. So how it can work is that if we use machine learning where it's capturing data, it can detect patterns. We can guide it in different flows of the business. We make sure we're structuring things properly. We can have much better success than we ever could before because we're leveraging really powerful tools to do that. Real powerful tools to see variances, real powerful tools to detect patterns. So yes, I think the idea of we can get better and make forecasting improve in many, many ways for many organizations is we're seeing it happen with organizations that are leveraging this type of tech, and we expect it to continue. It's not a panacea that I put in machine learning, all of a sudden I'm better. That misses some of the complexity or quite a bit of the complexity. But that represents a way to get around some of the most I want to call it time suck, but the most time-intensive activities about forecasting, getting that accurate. So yes, I think it'll finally work for most firms, but it's not without work. It is with work to make that a success.
That makes sense. Thanks for that explanation. So I'm going to switch gears a little bit again. What are some threats facing the Treasury community today? Can you give a couple of examples?
I mean, when you say threats, I have to think about cyber attacks, payment security. Cyber attacks are a big issue that can have an impact on finance. So whether you're talking about scripts, the hack of the Colonial Pipeline, some of the attacks on the water system in Florida, the meat packing plant. These are significant attacks on that disrupt the businesses in very, very telling ways. More than just saying, "Hey, we have to pay a ransom and it costs us money," and more than this is a big reputational risk. This is a significant issue. I won't get into what this means for states, nation states, and how they protect their companies, because many of these attackers are coming from nation state enterprises that are doing this or are granted cover. There'll be some significant changes in how these are responded to over time, and I'll leave it at that. Payment fraud is also very significant. We've seen a significant increase in man-in-the-middle attacks. Ongoing persistent increase in the business email compromise types of attacks and success and lifting of funds from that. This is changing a lot of things. The larger firms have been under attack, specific targeted custom attacks for some time. But the level of automation and sophistication means that smaller firms, which always were flying under the radar and undetectable by the criminals, are not considered worthy of attack, are now being caught up in these automated schemes, automated nets that go out. And this is a big deal. It's a huge threat, and people continue to be overconfident in their abilities and progress on this front. This being underprepared for the constant automated attacks that are going on is a real issue for companies. Those are some of the big threats. I mean, there's obviously volatility on commodity prices and other things, but these are sort of the big things that are confronting us now.
Craig, what are some tactics treasurers need to know about to help defend against fraudulent activities?
Yeah, so I'll say a couple. So, I would refer people to the 12 security principles, and some of those are, making sure you can respond rapidly, the idea of the principle of least privilege, isolating what can be done or seen by people or by credentials or IDs. This is important. I think some of this fraudulent activities from a payment security front, not cybersecurity. I'll leave cybersecurity up to the becoming a CISO, whoever does a podcast that has becoming a CISO series. Since this is becoming a treasurer, I'd say, do a payment security assessment. That is a real opportunity to look at what you're doing now compared to others and compared to what would be a standard of good corporate conduct, a minimum standard that you need, and put in place those changes that'll protect it. From a human side, the human firewall perspective, I have a friend who loves to say a human firewall, and just like you have a physical firewall that needs to be updated, you have a human firewall that needs to be updated. This training and testing on the training for payment security is vital. I think people have finally caught on the cybersecurity front, but they're not caught on fully on the payment security front. And this is really important. I think the other important part is just taking a comprehensive view on payment security, the payment process. And comprehensive doesn't just mean, I think of treasury payments, AP payments, payroll, but we look at the overall flow process, the end-to-end look, all of the elements, the interior of a company, the exterior, the firewall, the human firewall, and then process controls. And then alongside that, what tools like machine learning do we use to detect problems? There's a lot of opportunities there, and I am concerned that a significant majority are way behind where they need to be considering the threat level.
I know we've been talking a lot about changes in the Treasury world. Let's shift the conversation to some things that will not change. What activities will not change significantly?
So yeah, for activities and mindset and other items, so I'll try to share a few things. So cryptocurrency be king, or will cash still be king? Well, cash will still be king. Cash will continue to be king. Liquidity is super important at all times, and even more so during times of crisis. So liquidity will still be important, and protecting that liquidity and understanding that, pay off for all firms. Thinking, differently, learning will continue to be important, but I think will be seen as increasingly important. And so things like webinars and seminars will probably grow in importance as people learn different ways at different times and interact. I don't think the physical events or the online events are going to decrease. They may shift back and forth like they have during COVID, but this learning is going to be important. Liquidity will stay important. Risk will continue to expand, as I said earlier. The cash conversion cycle is going to continue to gradually, this long, slow, secular trend up in terms of moving more activities, more responsibility, more ownership into the treasurer's domain will continue to occur. Not necessarily they're going to be having all the people that process AP or AR, but the overall control of that activity will increase. What else is going to change in the Treasury world? So data has changed. Treasury doesn't sit in isolation that says the core responsibilities as far as, like we said, liquidity management, risk management, those might be categories that don't alter very much, even over many decades. But how the functions are handled and what is done to support the overall mission does change. And, so just a couple things. Data is exploding. Exhaust data from a company's records as data is just spun out from companies. Treasury will be able to use some of that by leveraging tools. It's growing very rapidly. A focus on the entire comprehensive process. I mentioned that before about opportunities to defend against fraudulent activities, but taking a comprehensive view also helps us with process efficiency, ability to scale. And then just so I can finish up without talking forever, on the analytical front, the change in the Treasury world, there's going to be people who are the data experts in Treasury. They'll have Treasury mindset, but they're going to become very, very good with understanding the data element. And then we'll have people that are good at processes. And then we'll have those that are really good at analyzing. So there's convergence in different areas. Like if you're really good at knowing where all the data is, how those fit together, you might also be good at doing analysis. And maybe it's process and analysis goes together as well. But this idea that there's an explosion of data, we have to have a comprehensive view of processes and what we do, and we have to analyze that data. We have to get it, normalize it, associate it, and make decisions about that. Those are all really, really significant activities that will continue to change dramatically. And we were having a discussion in the office the other day of, what happens with tech. Well, and some people say, well, tech on the personal side, the business to consumer, consumer to business, whether it's with your phone or other activities, will always be ahead of the business to business side, business to business. Technology will always follow it. And I don't think that's true. I think that a lot of the developments so far, heretofore, have been more rapidly developed on the consumer side. They're easier. You don't have to have multiple approvals for your personal account, right? It's you. Whereas you might have to have segregation of duties and multi-factor authentication and a couple other, control elements that exist there. So, yeah, it might take a little longer to set it up there. And that leads to faster adoption by consumers than tech that rolls out to the business world. But what I think is going to happen is the development and the power that companies have and that treasuries have is because they're dealing with much larger amounts of not only money, but larger and vast quantities of data. And when they can leverage that data to make different investment decisions, decisions about visibility, they can run more models. It'll become more powerful. And because they're pulling together more information, more data, they'll have more resources to do it. It'll be more self-directed, self-service analysis, which should, and I don't know when, it should surpass what can be done on the personal side. There'll just be more opportunities there. So when we think about the explosion of data, the growth of power of analyzing things, and the value you can achieve from it, there is more to be had on the on the business side. It is more complex and will take longer to reach that point where there's this inflection point or a crossover point where the business side leads what goes on, and in some cases does things in advance of what happens on the consumer side. But that's another thing that we've been thinking about with explosions of data, the impact and the value of what can be done in the business realm. There will be a takeover or replacement of the leader in tech development.
That's very interesting. As we wrap up part 20 of the Becoming a Treasurer series, do you have any final thoughts?
I want to talk about the change and rate of change in technology and where will the leadership from that come. Typically, we've seen the change in leadership and new developments happen more rapidly on the consumer side. There's more consumers. They can adopt things more quickly. They don't have the complexity of what businesses have. And some people think that will always be the case. I don't think that will always be the case. The expansion of data is far more rapid on the business side. The impact of process improvements or the ability to analyze what's going on, what-if scenarios, and other activities will certainly or should certainly allow business to business or companies to do much more significant activities with tech, with analysis, with tools like machine learning. This is exciting, and it'll be interesting to see when that cutover happens where more leadership and development happens on the business side than on the consumer side technologically. So the future is really, really interesting, and the opportunities for the future continue to grow for Treasury.
Thanks, Craig. It's been another insightful conversation within the Becoming a Treasurer series. I look forward to catching up with you soon.
I look forward to talking with you too, and I hope what I've said proves to be right over the next 5, 10, 15 years.
We'll see. I'm sure it will be. Take care.
Thanks.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.